Well, according to my clock, it is 1:30 sharp here in the Seattle area, 4:30 on the East Coast. So it's time to get started. Welcome. I'm Dean Jenkins, founder of followmetrades.com, and I'm really excited for this presentation. I enjoy talking about trading and talking to traders about pretty much anything, but I really like talking about something that I've just started using earlier this year, which is bringing Ichimoku Cloud and Elliott Wave together. And I call it East meets West. And when they agree, two great systems agree, we really can get some spectacular profits. So to get started, want to make sure you can locate the questions box. So please, during this presentation, ask questions and make comments. Make it as interactive as possible. It's better for you and more fun for me. So if you could locate the questions box and just type where you're calling in from, your city, state, country, wherever. It's always fun to see what kind of a distribution we get there. And while you're typing that in, I'm going to post a link in the chat area. So this is a link to download a PDF of my presentation if you would like. So you want to locate that chat area, and I'll be posting a couple links here throughout the presentation. So you want to make sure you can locate that and find it. Okay, we got UK, Atlanta, Phoenix, Adelaide. Wow, Newfoundland. No way. You might get the record. South Carolina, Somerville, Atlantic City in Jersey, Punta Gorda, Florida, California, Florida. Man, nice distribution. People calling from all over. Nobody from the West Coast, huh? I'm out here by myself. That's all right. Oh, California. We got John from California. Yeah, okay. San Diego, Jeff. Hey, well, welcome. Welcome, everybody. And again, I'm Dean Jenkins, founder of followmetrades.com. And let's just jump right into this. Okay. I'm going to talk about Ichimoku Cloud and Elliott Wave and using them together. Hey, Rick from Anaheim. All right. We got folks still logging in. So, of course, a quick disclaimer before we get started. Everything I'm going to present today is for education and information purposes only. I'm not an investment advisor. I don't want to be one. I have no interest in pursuing registration as an advisor. But I'm providing information, education. I'm providing my opinions, my trading methods. We're going to look at some live charts, and I'll give my opinions on those charts. I'll talk about trades that I'm taking, what I think are good setups, but that's not investment advice. And ultimately, each individual's decision about taking a trade is the responsibility of that individual. All right, here's what I'm going to cover today. I'm going to give a brief overview of Ichimoku Cloud. This will be a review if you've heard of it before, and new information if you haven't. I hope you find it interesting. Again, a quick review of Elliott Wave. I use a really simple, repeatable method for Elliott Wave. Some people kind of roll their eyes and say it's too complex or something. I try to simple. I like everything to be simple and repeatable. Then I'm going to talk about how I use them together, how I use Elliott Wave and Ichimoku Cloud together. And I'm going to talk about adding some risk management to the mix to make them, to make what I think is a really powerful, fully featured trading system. I'm going to talk about how I scan, how I can use the tools that I'm going to show you to scan for great trades, how to take a big list of symbols and narrow it down pretty quickly. And I'll analyze any stock charts that you have an interest in. If you got some trades that you're watching or you're in or you're thinking about, you like my opinion using these methods, let's take a look at them. So be thinking about that when we get to that point in the presentation. I'll be happy to do that. Again, you can download a copy of this presentation. I've posted a link. I'll hit it again here in the chat area. So you're welcome to download a PDF of this presentation and read it, take notes, whatever. Okay. All right. I see some folks are already doing that. Great. All right. Well, let's talk about Ichimoku Cloud. This is pretty cool stuff. So Ichimoku Cloud, it's also known as Ichimoku Kinko Hyo. It's a versatile indicator, and it defines support and resistance areas. and it does a great job of identifying trend direction, engaging momentum, and providing some trading signals. Okay, that Ichimoku Kinko Hyo translates into one-look equilibrium chart. It was developed by this gentleman. I got a picture on the screen there of Goichi Hosada. He's a Japanese journalist. And that's really interesting because most trading systems and indicators are developed either by traders or by mathematicians. But here's this journalist, and back in the 1930s, he published it. He started working on the system. He published it in 1969, so it's been around a while. And he took quite a while to perfect it and really get it right before he went public with it and published it. So that's a little bit of the history there. Goichi Hosada, and he's got his little glass of beer there, and it's probably Kirin Ichiban, right? Just like his Ichimoku Cloud. Ichi in Japan means number one. Okay, so what is Ichimoku Cloud? We're going to go through the basics. This is what it looks like on a TradeStation. Okay, there's some elements here. Brett is asking, is this for futures or only for stocks? It works on any instrument, any time frame, Brett, and I'm going to show some futures charts, some intraday futures charts when we look at live charts just a little bit into the presentation here. Yeah. So I do day trade futures. I'm primarily a stock and options trader, but it absolutely works. Any time frame, any instrument, futures, forex, stock. Okay. Anything that's got open, high, low, close price bars, it'll work on. Okay, so Ichimoku Cloud, it's got several elements to it. You can see there's a yellow line, there's a purple line, and then there's a shaded area that is bounded by a green line and a red line. So if you've looked at Ichimoku Cloud before and you're looking at my screen, you're going to go, hey, there's something missing, right? The Chiku line is another element of Ichimoku Cloud that I don't use, so I've turned it off, okay? And I don't need it with the way I combine Elliott Wave and Ichimoku Cloud and with my risk management, so I don't need the Chiku line. That didn't help me at all. And I want to keep the charts as clean as possible, okay? So let's go through each of these elements one by one and talk about what they are, what they do. So I've bolded this yellow line first. So this is called the Tenkan line or the conversion line. It's very similar to a fast moving average line, okay? The yellow line is like a fast moving average. The purple line is like a slow moving average. The difference is that this Tenkan line is calculated from the highest high and highest low for a given number of bars, you know, backwards, a smaller number, right? Whereas the moving average lines are calculated, it's an average of price, right? Average of the closing price versus the highest high, highest low. So it's a little bit different calculation, but similar. The idea of a fast line and a slow line, okay? It shows the short-term trend, and when it crosses over the slow line, it can, and I underline that, can indicate a trend change. It can also have false calls on trend changes, so you need some additional confirmation of that. The Kaijun line is the baseline. It's similar to a slow moving average line. So the formula is the same, you know, just like in a moving average. You know, you got a fast moving average, a slow moving average. The formula is the same. The only thing it changes is the number of price bars backwards that it's calculating on, right? So again, it's taking the average of the highest high and the highest low over a bigger number of look-back bars, right? So it's going to move a little bit more slowly. Again, similar to a slow-moving average, it shows the longer-term trend, and a crossover, you know, the fast over slow, can indicate a trend change. It can also have false calls, okay? This green line, which is on top of the shaded area, is called the Senku Span A. Senku means going first or proceeding. It's funny, in Japanese baseball is very popular in Japan, if you don't know, and the Senku is the first guy at bat. So Senku means going first. This green line, the Span A line, forms the faster part of this cloud boundary. The shaded area is the cloud, okay? And so the green line forms the faster part, and it predicts potential future support boundary areas. And it's highly accurate until it's not, right? Until it's not, until the trend actually changes and then price goes through the cloud. Senkou span B is the slower part. It's this red line boundary, and it predicts the other boundary of this cloud area. And it's highly accurate until the trend changes and price comes crashing through the cloud. The Kumo, or cloud, is the space between the span A and span B lines. And the thicker the cloud area is, the greater the distance between the span A and span B, the more support and resistance they are predicting. Okay? When we get thinner cloud areas, then price can break through the clouds more easily. And you'll note that these lines, the span A, span B, in the shaded area, are being plotted out into the future. If you want to load this onto a chart, you have to put some extra spaces to the right to allow it to plot out into the future. So these are predicted. This is a variable you can set. How far out into the future these lines are being calculated and plotted. But that's one of the nice things about Ichimoku Cloud, is the fact that it's predictive. It's predicting several bars out into the future what the support and resistance areas are going to be and how strong they are. Moving average lines are purely, they're a perfect look at what already happened. Moving averages don't predict anything, right? They tell you what happened and what's happening. So these span A, span B in the cloud predict something. And, as traders, that's what we want. We want to know what's going to happen next, right? So that's very helpful. So crossovers of the Tenkan over the Kaijun or fast over the baseline in conjunction with the cloud can absolutely indicate new trends and entry points. Now there are some false signals, so we need something to back this up, right, or another external thing to verify it. Because we can see we had a breakout above the cloud and a crossover here, right, here, and these were all false calls. The trend didn't start. But when it broke, right, when the trend did start, it was absolutely right, and then, wow, there it went, rocking and rolling, okay? The cloud, it provides, I find, highly accurate, remarkably accurate support and resistance predictions during a trend. See how the price pulls back to the cloud, and as it approaches it, there's some real support being predicted, again, several bars in advance of where the support's going to happen. Now, sometimes price can go down into the cloud before it reverses up, but I found time and time again that it's really predicting support areas or in a downtrend resistance areas above. So it's pretty cool stuff. So if I were to assess the Ichimoku Cloud as a complete trading system, it's got some excellent qualities. It's got great trend identification. It can call some early entry. It's got some support and resistance predictions, but it doesn't give you a price target. And price target's important to me. I like to know what the reward to risk on a trade is before I take it. And you got to have a price target to know what the reward to risk on it is. It doesn't really give you any risk management tools. The cloud's too wide to offer stop placement for me. It doesn't really give you places to scale out or manage your trade, take profit, and it doesn't really predict a trade point. By the time it's broken down through the cloud, you've given up a lot of profit. So it doesn't do those things very well, but it does have some really excellent qualities, good enough to include it in my trading system. So again, I started using Ichimoku Cloud early this year, and before that, I was trading with Elliott Wave and some Dow theory and art tools, and that was a fine strategy. I made a lot of money that way. But bringing Elliott or Ichimoku Cloud in really helped change it. So Elliott Wave, let's talk about it. Brett says, does it give a signal and precisely when to enter? Yeah, I'm going to show my exact setups here in a minute, Brett. It can for sure. I like to do it in the context of waves. That gives us a much better, more highly probable trade. Okay. let's talk about Elliott Wave. Again, some people roll their eyes and they, oh, Elliott Wave, there's 1,000 patterns to memorize and it's complicated and the practitioners can't agree. I agree with all that. And that's not how I use it. I use it in a very simple, repeatable way. I'm just looking for big waves, big retracements, and predictions of the next wave. Right? This is the only pattern I care about. A 1, 2, 3, 4, 5. 3 is great. 4 is okay to trade. I prefer to trade 5, 3 and 5, right? The impulsive waves. So this system was developed by Ralph Nelson Elliott back in the 30s, same time that Hoichi was working on Ichimoku Cloud, by the way, back in Japan. So Elliott says, hey, the price moves from collective investor psychology, crowd psychology, and it moves from optimism and pessimism and natural sequences or waves, a series of impulsive or corrective waves. And when you see a pattern, and this is so important, one of the things I think that frustrates people about Elliott Wave is that when they look at a chart and they go, oh, I can't find the wave count. And the reason, more than likely, is there isn't one. Not every chart has an Elliott Wave count on it, right? So if you're trying to find Elliott Wave counts and you look at a chart and you're straining your eyes and, is that an ABC? Is that 3, right? If you can't find it, like in 2 seconds, it's probably not there. And I just move on to another chart till I find a good pattern, because what happens is when you have a pattern, particularly when you got a wave 1, 2, 3, and 4, we've had 4 waves that have followed a known pattern. They've met some rules. We use Fibonacci retracements to measure that. The probability of the next wave gets really, really high, right? If it fell into a pattern, the probability of it completing the pattern is high. That's what I like about it, okay? Wave 3 is good to catch. It's the biggest wave in the series, but you don't have as much history behind there to predict that it's going to happen. It really comes from channel breakouts and new trends and stuff like that. But if you can catch it, it's really, really good, okay? So I like wave 3, I like wave 5. Occasionally I'll take a wave 4 trade. But these waves can occur in either a bullish uptrend or a bearish downtrend, either one. The same principles and measurements apply. For a bear trend, you just flip that thing upside down. And of course, I trade both bullish and bearish markets. And I'm fairly bearish on the market right now. And when we go look at live charts, I'm going to show you what I think of the S&P 500. So here's some waves labeled on a chart here. This is an actual trade we took earlier this year, Vail mining stock. So we traded wave 3 and we traded wave 5. We did really well. Okay, so wave 3 is easy to spot on a chart. It's the biggest, most dramatic price move. Now you can see if you're just looking, here's kind of a channeling or sideways market. Wave 3s can come out of these channel breakouts, but there's no guarantee it's going to be a wave 3. So they're a little less probable. But here we had, big dramatic move. That's obviously wave 3, biggest, most dramatic price move on the page. Nothing more complicated than that. All you got to do is find a big dramatic move on the page. That's wave 3. Okay. Then you go back and look, what's the first move up before that started? It's right there, little wave 1, little wave 2. They don't have to be big. Then we look for a retracement, wave 4, down to Fibonacci retracement zones, 38.2 to 61.8 Fibonacci retracement zone. We expect 70% of wave 4s to retrace into this zone. 15% will fall a little short, 15% will go a little bit over, but not much. We just give them a little bit of room, okay? But the sweet spot right here is 38.2 to 61.8. And if we get a wave 4 that retraces into that zone and then shows evidence of the next wave up starting, we got a really nice potential trade here, right? Because the high probability is, since we have 1, 2, 3, 4 waves that met some rules, that it's going to go up into the wave 5 target zone, which is established using Fibonacci extensions, right? We measure that from wave 2, 3, and 4. And when we bring Elliott Wave in, we can see that it absolutely helps us find entry points. So as wave 3 was starting back here, we had a fast over slow crossover and we had a price break above the cloud. And boom, there went wave 3, right? And then it went down through the cloud, clearly a trend change, and we waited. Almost got a breakout here, but not quite, pulled back. And when it broke the cloud, crossover. We had a really nice confirmation of wave 5 starting, and we took that. This is a real trade that we took, and we made some money on it, which is the whole point, I think. Okay, so that's how we use them together. We want to find Elliott wave counts, and we want to use the cloud, the Ichimoku Cloud, to confirm trend changes, right? That when the next impulsive wave is beginning, or if we're going to try and trade a corrective wave, that the corrective wave has begun. And like here, by the time it broke through the cloud, right, that was over. It was already in the price target zone. So if I were to evaluate Ichimoku Cloud and Elliott Wave together, they've got almost everything that we need here, don't they? We got all, trend identification, early entry, support resistance. We've got a price target established by Elliott Wave, which is really important, and we've got an exit point because we got price target zones established by Elliott Wave. But we've still got risk management and trade management. Neither system provides those capabilities. Rick is asking, what time frame do I use? I use whatever time frame provides a good setup, Rick. I say that a little bit tongue-in-cheek. So the tools work on any instrument, any time frame. If I'm trading stocks, I'm primarily looking at a daily chart. If I'm doing intraday futures, I'll show you my charts. I use a combination. I look at 10-minute for the big trend, and then I trade range charts for my actual trade setups. Sometimes I'll go to 60-minute and even 10-minute. If I'm trying to trade like an earnings announcement or a big dramatic move on a stock, I'll go to a 10-minute chart. Okay, but the exact setups I'm looking for don't change, right? And you can see those setups on any time frame chart. So long answer to a short question, right? All right, so we got some gaps here. How do we fill those gaps? Well, I have a risk management methodology that I use, risk and trade management. So you can see these white arrows. The chart's starting a little busy here, but you can see these white arrows, right? I believe in Dow theory. Jim, yeah, we're going to look at some futures charts here in a minute, Jim. We're going to look at live charts. I'll show you some stock charts, and then I will show you some intraday futures as well. Absolutely. Okay, so stop and risk management. You can see these white arrows, hopefully. I believe in Dow theory, and Dow theory tells us that a trend, an uptrend, is the definition of an uptrend is a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and that you have an uptrend going on until that pattern gets broken when you put in a low, lower high, new low. That's when the trend has changed. Okay, and then the downtrend is lower lows, lower highs, lower lows, lower highs, until that pattern gets broken. You put in a high, higher low, new high. So I use that theory to manage my trades. Once I get a good entry, I put my initial stop down at a previous significant low, and then as higher high, higher low, new highs get put in, I trail my stops up to the new higher lows, right? Because that's where price will be until the trend gets broken. And then I let the trend take me out, right? I stay with this, I trail my stop up until price comes down and hits my stop. And so it works pretty well. These pyramids on here are just calling out the higher highs, higher lows. This is software from traderscoach.com. They help, but not essential if you're trying to just use Dow theory to manage your trades. So when I add in my trade management, again, using Dow theory, then I got all the gaps covered, right? I got all the elements I need for what I think is an excellent trading system. I use Ichimoku Cloud, Elliott Wave, and very disciplined, specific, and repeatable risk management rules for once I'm in the trade. Where do I put my stop? Where do I move my stop to? And where do I take profit at? So that's how that works. Let's look at some live charts now. Got a couple people asking about futures. I've got some stock charts that I'm pretty excited about. So if you'd like, go ahead and type in some symbols that you would like to look at, either stock or futures. If you're typing in futures, type in the time frame, or if it's other than daily for stocks, type in the time frame so I know what to do here. Okay. Oh, before we do it, I'm going to give you my look here on the S&P 500. So I see your symbols coming in. We'll be on it here, man. So this is the S&P 500 on a daily chart. Let's pop this thing up to the weekly just for a minute. Just as a bit of a refresher here. So, where are we? We've been in a bull market for 7.5 years that went up in a pretty orderly, uninterrupted fashion. And now here we are over the last year, right? Really starting to consolidate and get a little bit choppy up here. And what do we got going on right now? Let's take it down to a daily again. What we got going on right now is Dow theory, right? Low, lower high, new low, lower high, lower low. This low actually went below that low. We're down below the cloud, right? And in our oscillator, the bullish moves are definitely losing momentum and the bearish moves are gaining. That's called bearish divergence, because even in an uptrend, we are losing momentum. So I think we're really close here to having this down move start. And if I go back to the weekly chart on a longer time frame, this is all wave 3. And the expected retracement, wave 4, normal, healthy, ongoing market cycle would take us down to these blue lines, which you probably can't read, at 1674 to about 1360 on the S&P 500. That's not a crisis unless you're a buy and hold person and don't have much time left. That we can make a lot of money. It goes down faster than it goes up. So knowing that, there's some real profit potential here. Okay, let's go look at some of yours. Got S. Is that stock symbol S for Lee? Hope that's the one you wanted. S, Sprint Corporation. Okay, Sprint's pretty interesting here, Lee. So remember I said wave 3 is really easy to spot. Not to make it confusing, biggest, most dramatic price move on the page. Well, there it is. There's a real big dramatic price move, right? And the whole time, once it really got started, look how the cloud provided really accurate support for that. We got down into the cloud, but it never broke through it. And then when the thing broke out, we had a real trend going on there. So what's going on now? Price is breaking down into the cloud, right? Pretty sharply. If I get my oscillator scaled right here, I bet we're going to see that it's starting, the momentum's starting to go negative on this. Yeah, it sure is. Okay. So what we're looking for is wave 4 to start on this thing. And here it is. Here's this whole wave 3 uptrend. Here's wave 1 and 2. 1, 2. It's just, you go find out where the trend started. Where's the lowest point? It's right there. What was the first move up, first move down? 3. So that's 1, 2, 3. We draw our retracements from 2 to 3, and we expect Sprint now to have a wave 4 that goes down between 38.2 and 61.8 Fibonacci retracement. The problem with this is by the time this gets down to the cloud and really confirms that the downtrend has started, there's not much profit left. Not much left there. You have to wait and see where you put your stop at. So I like to make sure there's a good return to risk on the trade. I only want to take the trade if I have the chance to make more money than I'm going to lose. I don't take 1-to-1 trades or less, right? I want at least 1.2 to 1, ideally 3, 4, 5 to 1 to take a trade, okay? So it depends on where the stop goes. All right. Okay, that was S. QQQ for, boy, I hope I get your name right, Simile? Simile. So the Q, it's the the NASDAQ ETF. It really looks like the S&P 500, although it's not down under the cloud yet. Again, it's had a 7-year bull run. It's up at the top. It's starting to consolidate. It's getting pretty choppy this year, last year, into last year, and it's just running out of steam. We do have bearish divergence in the oscillator. So it may go make new highs, but they're not going to be impressive, I don't think. Same thing for S&P. Could it go make new highs before it starts down? It could. They're going to be very incremental. So I'm prepared. I'm looking for when the big move down starts. Okay. Hey, Ashlyn, I'm going through several examples here, so hopefully you get to see what I'm talking about with Elliott Wave and how I use it together. Okay, that was we did QQQ, NICE. NICE. Remember I said that not every chart has an Elliott Wave pattern? You know, that this is kind of a good example. So there was a big dramatic price move back here. There was a retracement, and we would have expected a wave 5, but it doesn't. You know, it kind of happened. Let's see if it hit the target. This is just fun. Okay. Uh, so there's there's where it started. So there's 1, 2, 3. There was 4 right there. It went into the zone a little bit deeper, but that's okay. Boom, boom, boom. We measure it. Look at that. Price went. It's like magic. It's uncanny. Went right into the price target zone. So not super dramatic, but pretty nice. Now what's next? What happens after wave 5, right? That's the real question. Well, so there can be an A, B, C in the opposite direction, or there can be a new trend, a new 5-wave trend in the opposite direction. Both probable scenarios are to the downside. We would want to see this break through the cloud down here and give us a short setup on NICE. So that's what we got there. Yeah, CL. We're going to look at CL. We'll go over to the futures charts here. Let me look at one more stock. Okay. I'll give you one that I like. Okay. Here's a trade I'm taking. So here's a trade that I'm short on right now. This is Walmart. Look at this. Look how orderly this market is. If you looked at the other charts, you saw they were a little jaggedy, right? This is about as orderly a market as you're going to find. Look at this impulsive down move last year on Walmart. You know, pretty orderly market. A very nice orderly wave for retracement into the Fibonacci retracement zone, and then clear evidence, right? It's down below the cloud. It's turning down. The oscillators turn negative. And we've got Fibonacci price extensions giving us a price target down between 54.96 and 42.35. That's a trade I want to be in, man. So I got short on this at 71.78. My current stop is sitting at 70.43, so I'm already got a winning trade. Even if it goes and hits my stop's now under my entry. And I expect this thing to march on down. And I love trading a trade like this with a put option. Nothing fancy. Don't need any strange winged creatures. Just go long on the put options, man. Make sure they're far enough out in time with a high delta that it's not going to expire on me before the trade's over. So there's one. There's a pick for you, Walmart short. Still great, plenty of room to the target on that, plenty of time left in this trade here. David's asking, what are the indicators on the bottom of the chart? This is an oscillator. It's called the OWL, Optimum Wave Locator, and this is a PTF, Precision Trend Filter. It's just that, a trend filter. If it's yellow, it says neutral, no prediction. If it's green, it's calling for more highs, and if it's red, it's calling for more lows. They come from traderscoach.com. Yeah, Ashlyn, Elliott Wave isn't an indicator. It's a method, right? We use built-in indicators from the platform, the Fibonacci retracements, Fibonacci extensions, to analyze wave count. So yeah, it's not software. It's not an indicator. Not a problem, no. Vinod is asking, how do you figure wave 1? Yeah, so we just look for wave 3. We look for wave 3 because wave 3 is super easy to spot. See on this chart, most dramatic price move. The oscillator is confirming it too, right? It's like the biggest amplitude oscillator. And then we go back and we find out, where did this trend start? What was the absolute high before this trend started? And it's right there. And then you go, what was the first move down? That's wave 1. Doesn't have to be big at all. Just a move down, and then the next move up, wave 2. There it is, 1, 2. They can be tiny in comparison to 3. They typically are. So that's how we do it. Okay. Let's look at some futures charts. I think this audience is more into futures than you are stock, and that's okay. Okay, you can't project wave 5, Lee, unfortunately. I wish we could. I wish we could. Oh, 5, wave 5. Absolutely, we project wave 5 with Fibonacci extensions. So on this, what I do, I'll take them away. I'll show you, right? Because this is completely repeatable. So we've got wave 3, right? We got wave 2. I said wave 1, 2, 3. And then we got wave 4, which retraced right into the Fibonacci retracement zone. So I just grab my Fibonacci extension tool, and I go from wave 2 to wave 3 to wave 4, and that gives me a price target zone right down here in wave 5. Fibonacci extension between 61.8 to 100%. That's how we do it. And Jim, yeah, absolutely. NinjaTrader's got Fibonacci tools built right in for free. Yeah, so you could do this Elliott Wave analysis. Now, Ichimoku Cloud, it does not come with the NinjaTrader platform. I understand if you go into the forums, different NinjaTrader forums, there's people that are offering both some free Ichimoku Cloud indicators and some paid ones. I wouldn't pay for them. You should be able to find some for free. Okay. Futures. By golly, we'll get there. We're doing good on time here. All right, so here's my futures, my intraday trading setup. I like trading the E-mini. I like trading gold. I like trading oil. Those are my primary intraday trading instruments. Now, I'll go look at NQ. If natural gas is coming out, I'll look at it. But these are the big boys here. High volume, liquid markets, right? And I just like them. I've traded lots of other stuff. I like these. Okay. So what I have across the top, this is a 10-minute chart. So this is the ES on a 10-minute chart. I just want to see what the big trend is and whether we're above or below the cloud. And a 10-minute chart is good for, a trend that's going to, where are we at over 3, 4, 5 days. It really tells you where you're at there. So I got 10-minute across the top, ES, gold, oil. And then down here I use range charts. And on the, range chart is simply kind of like a brick, but it's different. When price goes beyond, in this case, 5 ticks, which is my setting on a ES, it makes a new bar. As soon as it exceeds, the high to low is more than 5 ticks, it paints a new bar. So no time element whatsoever. It gives you pure price movement. I use a 8 tick on the gold, 8 tick on the oil because they move a little bit faster than ES. So what I look for is the same thing I was talking about on, I look for Elliott Wave setup, Elliott Wave count. I look for Ichimoku Cloud. But what I do is I back it up. Very small time frames are really subject to the bigger trend. So I want to confirm it. That's why I have the 10-minute chart up here. Now, if you look at today, right, this morning, I have a live trading room, and we were watching this morning, right after the open, right? We saw ES heading down, right? Pre-market ES was up. We saw it heading down. It broke through the cloud here at about 6:40 West Coast time. And what I look for is I want to see it break through the 10-minute cloud before I'm going to take that short down here on the range chart. Because the cloud can provide quite often some support or resistance, like you look back here, right, price came down to it and went right off of it. So I don't want to be going short and right into some support. So we let it break the cloud, and when it does, we take this setup here. And we had a really nice trade there, and then I caught another one later today when it went up to the cloud and reversed and headed back down again. So I took this trade later today and made about 12 ticks on that one, I think. It was pretty nice. And so that applies exactly the same way over here on the oil chart. Had a nice long this morning as price came down to the cloud on the 10-minute chart and then bounced off it, head back up. We got a pretty nice setup here on the oil, right? So that's how I use them on intraday and like on futures trading. So it works pretty well. All right. Let's see, it's about 10 after. Any other questions I can field before we move into the next section here? Yeah, Lee. So what I'm doing, you're saying clouds are different in every time frame. What I want is I want to take trades that are with the big trend. So I don't want to. What I don't want to do is take, like you can see ES here. We took a short. It headed up. I don't want to take a long that's going into the 10-minute cloud, even if I have a long setup over here on the range chart. The range chart is a much smaller time frame. So at this point, when it looked like, oh, there's a long setup, it was going right into overhead resistance on the 10-minute chart. So I'm just using that as a filter. And good thing, right? That would have been a loser, right? But once it started heading down again, bounced off the cloud and headed down, now we got a pretty nice trade, okay? So that's how I use them together, Lee. You know, multiple time frame analysis, making sure my trades are with the big trend and I'm not going into resistance or support that I can't see on a smaller time frame. Mel is asking what the 1B is. Those are reversal bars. They're part of this package that has the pyramids. Pyramids are calling out lower lows, lower highs, lower lows, lower highs, and the 1B, 2Bs are calling off key reversal areas. Those are good points to scale out. So once we're in a trade and we're in profit, we'll use these reversals to take part of the position off and lock in some profit. So they're pretty nice that way. Do I consider, Lee saying, do I consider 1 hour daily or other? For intraday, the 10-minute I found to be completely sufficient. And, you know, if you were looking at higher time frame, hourly, daily, you might not get any trades, okay? You might not get any trades. Yeah, Mel is asking what MP is. Some of these pyramids, you know, see some of these pyramids are labeled P and some are labeled MP. So P is a primary pyramid. That means it's part of the primary trend. MP means it's a minor pyramid. And the only reason you'd see that is it's a bullish pyramid that has not gone above the last major bearish pyramid. If we got one to form above there, it would be major. Okay. Well, we've covered a lot of ground. Ichimoku Cloud, Elliott Wave. We've looked at several charts. Let me show you scanning. That's fun. How can I take a list of hundreds of stocks and very rapidly get that down to a manageable set of charts? You know, I can't go study 100 charts at once. I'm not. I don't have that much energy. But I can get it down to a very manageable list. Let me show you how I do that. So Ichimoku Cloud, you can put the indicators on what's called radar screen. Oops, that's not what I want. Is it? Yeah, there it is. This is called radar screen in TradeStation. I think it's called the scanner in NinjaTrader. So most major legitimate platforms have some form of deal where you can load a bunch of symbols and indicators into a table like this, right, for analysis. So what I did was I loaded the S&P 100 into here. So we got, funny, the S&P 100's got like 102 symbols in it. But I put the Ichimoku Cloud indicator in, right? And now in the trading platform, you know, being able to really do sorting and adding additional formulas and stuff, it's really, really hard. So what I do is I just put it in here. I get the indicator values. And what's really cool is you can click on this, you can copy it, right? And you can paste it right over into Excel. And I've already done that, so I don't have to bore you with watching me go through all these steps. But here it is. Here's the S&P 100 today with the indicator values, pasted into Excel. And then I just added some quick logic steps here. I just said, hey, if the trend is down as determined by the Ichimoku Cloud and price is below the cloud, so if down, if below, that's a bearish signal that I'm pretty interested in, okay? And I want to know what percent below the cloud is price, because I want to catch trends early, right? And the ones that just coming out of the cloud, the price is just below the cloud, that could be getting me really into a price pretty early. So that's what I'm just sorting. I got the S&P 100 here, and I just sorted it. I want a true bear signal, and I want the ones that are the closest to the cloud, right? Just came out of the cloud. So I got this sorted on bearish. I could easily resort that. Now that I got it in Excel, I could go, oh, I'm interested in the bulls, right? And resort here, and there's my long trades. Okay. But I'm kind of a bear right now. I think we got a pretty good correction coming. So let's just go look at a few of these and see, because rather than the 100 symbols, right? I can go look at 5 or 10 of these top candidates, see if I can find something really, really interesting. I showed you Walmart, right? That's a trade I'm already in. I'm already in UTX. I'm kind of happy that the scan is bringing up stuff that I'm already in. So I just take the symbol, UPS. Let's go see what the chart has to say about UPS. Yeah, so when I do coaching with people and I teach classes on how to analyze charts, first thing I say is, just look at the chart for like a second and get an impression, or just answer these questions. Is it in a trend? Is it in a channel? Or is it a mess over a number of price bars? Well, UPS is kind of a mess, right? There's no real pattern here. It is below the cloud. We do have lower lows, lower highs. Probably going to go down, but I can't really predict that. So the scan didn't really give me anything good there, right? I've already looked at them. Costco was okay, not great. Target is okay. It's actually a tradable pattern right now. Why? Because finally we got a dramatic price move. I said look for a dramatic price move, a retracement, and the next wave. So the rest of it's kind of a mess, no pattern there. But now we got a dramatic price move, so I can just real quickly. This chart's worth analyzing. I can spend 2 seconds determining if it's worth analyzing, and I can spend about 15 seconds analyzing it. 3, 4 into the price zone. Is there any profit left in this trade? A little bit. So here's my price target zone. My current stop I would have at the last higher high right there. I'd have my stop there. Here's how I do risk to reward calculation. There's the entry price, today's close, and here's my target, right? Somewhere in the middle of here. So I just look at the distance between the entry and the stop and the entry and the target, and it looks like it's an okay reward to risk on that, okay? If you want to be really conservative and put your target down here at the, at the conservative end of the price target zone, then that risk to reward is not okay. So that depends on, your approach to that. Johnson & Johnson, I'm actually short that. IBM wasn't good. DUK. So DUK, Duke Energy. So look at this. This is a obviously an oil-related trade. Big dramatic move, right? Big dramatic move lately. So that is actually a new trend, and this is wave 3. Let's just measure it. 1, 2, 3. Look, 4's done, right? 4 went perfectly into the wave 4 retracement zone where we expect it to go. So this one is what we call put it on a watch list and wait, right? It's not there yet, but if we can bust through this cloud, we should expect this to get up into this wave 5 area, and that'll be a really nice trade once it's confirmed. Now it may go sideways. This cloud will start thinning, so it may break through. Then that won't be clear up here, but maybe down here. So that's just when we just put a watch on it and see, if it plays out and if our criteria gets met. Let's go back to target. So Lee's asking, how did I put my stop on target? Let's blow it up a little bit. That's what the pyramids do a really good job of, right? But I use Dow theory, so lower low, lower high, lower low. So I'm going to put my stop above that previous high as a new low is put in. And the pyramids just paint that for me, okay? Lower low, lower high, new low. Put my stop at the previous high after a new low is put in. And if it does it again, lower low, lower high, new low, I'll trail it to this high. Okay, that's how I do the stops. I think it's important to use, I know a lot of people use fixed stops, either a fixed percent or a fixed price. I think it's important to use the reality of price movement for our stop placement on the charts, not arbitrary fixed numbers. All right, so we covered Ichimoku Cloud, we covered Elliott Wave, we covered them together, looked at several charts, talked about scanning. Man, we're making good progress through this presentation. All right. So what next? We're getting pretty close to the end here, so I want to make sure we wrap up. What next, right? Well, if you got a grip on what I've been talking about, you have a little bit of knowledge of Elliott Wave, you know how to use Fibonacci tools, the Ichimoku Cloud stuff made sense. Give it a try. Anything new you try, I would sure like to recommend that you would test that out in Sim first. I think it's a little reckless to go try new systems with live cash, right? Make sure it works. Make sure it works for you. Because the trading system that you can trade successfully, I may not be able to because it doesn't match my belief system, my psychology, whatever, right? And the same thing, a system that works for me may not work for you. So test it in Sim. So I have a stock pick subscription service. I publish it to my subscribers. We've got people all over the world following my stock picks, and we're all making good money with that. So I'll talk about that. And I've got an Ichimoku Cloud training module. I've got a course, short course, for more details. So the settings, if you've been trying to look at the same charts I'm looking at, you may notice they're a little different. So I've got proprietary settings on my Ichimoku Cloud and more details on my trade setups and trade management. I got a course on that. So we'll talk a little bit about that. This one attendee, your name comes across as HTML5, man, so I don't know what that means. And asking is Costco short. No, that's why I didn't skip over it. It wasn't a great setup, so not good. My stock pick subscriptions. So here's my running average. 2013, our portfolio made 57.3. We were about 2x the indexes. 14, we made 37%. We were triple. Last year, the indexes lost a little money. We made 28%. That was a tough year, if you remember looking at the charts. And this year's been brutal. But so far, year to date, we're at 24%. We expect, we think we'll be able to pass last year's up pretty quickly here. So these are trades I'm taking. That's how I got started in the stock advisory stuff, right? I was taking picks. People were asking me about them. And so finally, I just said, okay, I'm going to form a little business here. And if you want to follow along with my trades, you can pay me a little money and a subscription. And so I publish the trades I'm taking with my own money in my own account, right? So this isn't abstract. This is very real for me. You can choose to follow those trades. You place the orders in your own account. I send updates through the life of a trade. We have a weekly stock pick chat session. I provide tools and training on my website. I provide risk management calculator, all kinds of stuff, right? Risk management is so crucial. So as a subscriber, I ahead of time go, okay, I'm going to go short on Walmart at, whatever the price is. And when the price gets there, we go short and the initial stop. And then when we get down into the trade, I go, okay, we're going to take some profit at this price. We're going to take a third of the position off. And then when we're going to finally close the trade. I also publish the details on options for those trades. So my subscribers, some of them like to buy or sell stock. Some of them like to use options. I give the details to trade it either way. So I just pretty much told you that, everything here. So here's the deal. The list price on that's $127 a month. For attendees of this webinar, you can get a 23% discount. You can get it for $97 a month, as long as you have, and you can cancel at any time, right? That's a month-to-month thing. And I'll give you a 10-day trial for $7, and that's 100% money-back guarantee. So if you are interested in following along, I do all that work anyway. If you want to just draft off the work I'm doing, scanning and analyzing trades and managing them and all that stuff, you can give it a shot for $7. And if it's not your thing, I'll give you a 100% refund of your $7. That's why I make sure people are serious, right? To get into the trial. In that 10 days, you'll get to see 2 weeks worth of picks. You'll get to see the existing open trades. Some of them I still have great entries. We'll have 2 weeks of our stock pick chat session if you want. You have the option to set up a one-on-one consultation with me during that period. Email support, answer any questions, right? And winning trades. And we're getting pretty close to some volatility in the market here, so it might be nice to have some help, right? So 10 days, $7, 100% money back guarantee. After that, it's a discount, $97 a month, and month to month. You can cancel at any time. So there you go. If you're interested in that, I posted the link in the chat area, and it's also in the PDF download if you'd like to think about that. This link takes you to a landing page that has some more details on it too. Now, trading room's a separate deal. Now, we have a live stock pick chat session once a week for the picks. I do have a futures trading room that I run in the mornings, Monday through Thursday, for about 2 hours. That's a different deal. I didn't even bring a link for that. If you're interested in the trading room, it's really cheap. It's $27 a month. Again, 4 days a week, 2 hours a day, from the open till 2 hours later. Shoot me an email, dean@followmetrades.com, if you're interested in the trading room. I should have brought a link, right? There, I just posted my email. Shoot me an email if you're interested. I'd be happy to have you check that out too. $27 a month. We do have a course. I just launched this course back in August. So the course on Ichimoku Cloud, it's got my proprietary settings. It's got some training on Elliott Wave, how to do the Fibonacci analysis, the wave count, the exact setups. You get a one-page PDF printout you can tape next to your monitor that's got the exact setups for different trade types. It's got recordings of live training that I've done with groups. It's got PDF study material. It includes one-on-one consultation if you like, and phone support. The cost of the course, $149 list. You at this webinar, you can get it for $99, 38% discount. Okay, and there's a link, and let me shoot that link over in the chat area there. And it's embedded in that PDF if you wanted to download the PDF and think about it. It takes you to a landing page where you can read more about it as well and think about it. And I'll post this link for the PDF again here real quick. There you go if you want to download the PDF and read about it. So that's all the material I had prepared. And man, you guys had some great questions. You were very engaged. We're right up to an hour, so I want to honor that. I scheduled it for an hour. We do have time for a few questions if there. So Larry Williams and Kramer have Costco as bullish. Well, we got to look at it, right? I gotta go up against Jim Kramer. Jim Kramer is the most entertaining guy I know. I could watch him for hours. I don't think much of his picks, but he's great to watch. So here's what I when I'm doing coaching and teaching, right? I say, hey, look at a chart and answer. Is it in a trend? Is it in a channel, or is it a mess? Right? I think this is a mess. Right? It's swinging. It's big swings, high to low, with no predictability, no pattern to it. Right? So it very well may go high. Right? There may be a fundamental case for that. I used to be a fundamental analyst. I got an MBA. I did all this stuff on earnings and spreadsheets make you go blind. And I got super frustrated because great company, great products, great earnings, great management, all this kind of stuff, and the price would go down, right? So about 6 years ago, I started getting into technical trading, and this works. So Costco's a mess for me. I don't know where it's going. I'm not buying it or selling it. Long answer to that. Lee, hey, thanks, man. I'm glad you enjoyed the webinar. I enjoyed being here. It was great. Any other questions or comments? I'll hang around, see if you have any. I'll leave the links up there for just a little bit. Hey, you're welcome there, HTML5 viewer. All right. Well, I'm going to log off. Again, I'll leave the webinar running for just a little bit so you can see those links if you like. And hey, thanks for showing up. Thanks for your questions. It was great being here. Really appreciated it. And we will hopefully catch you in the future at another event. And again, if you have any questions or follow-up, don't hesitate to shoot me an email. My email is in the chat area there. All right. Have a great evening. Take care. Hey, use risk control when you're trading. Be careful. Keep your losers small, your winners big. All right. Talk to you later. Bye.